Hi everyone, Ricardo Gonsalves here with SBS on the Money for this Tuesday, the 9th of February 2021. It's your daily 10-minute business and finance news wrap. Later, just how reliant are businesses on JobKeeper? Because the answer might actually surprise you. But first, to our developing story, a New South Wales inquiry has found that Crown Resorts is not suitable to hold the licence to operate its Barangaroo Casino in Sydney unless its major owner, James Packer, sells down a major part of the stake in his company and a number of other conditions. Now, shares in Crown were on a trading halt today, and at the point of recording this live stream and podcast, Crown hasn't responded yet. So earlier, I spoke with Berman Invest's Julia Lee for more. Julia, what does this development mean for Crown?
Unfortunately, this is negative, but it means some big changes are ahead. In particular, looking at James Packer and possibly the need to sell down his stake from 37% down to 10%. We know that sellers drive down the price of shares, and when a large chunk of shares hits the market for sale, it's usually at a discount. So combined with the negative outlook for Barangaroo, our Crown Barangaroo, we have the negative outlook for the share price.
What's the outlook for the business?
Well, today's announcement is negative, but in conjunction with that, there's an ongoing AUSTRAC investigation. And we know that when the banks, CBA and Westpac, went through an AUSTRAC investigation, there was a dampener on the share price, as well as the threat of penalties, higher expenses, and higher compliance costs. And that's what Crown has to deal with now.
Julia Lee there from Berman Invest. Now, NAB says business conditions and confidence, they're still high in January and above the long-term average for the series, even though we're about to see JobKeeper come to an end at the end of March. Why and what does it mean or say about the need for JobKeeper? For more on that, I spoke with NAB's chief economist, Alan Oster. Alan, both confidence and conditions for businesses are above the long-term average. Why?
Basically because the economy is performing well and people have a sufficient degree of confidence to think it's going to keep performing well, at least in the next 6 to 12 months. So basically it's a good news story.
Which sectors are most confident?
The sectors that are most confident are the ones that are doing the best at present. So that's retail, wholesale, and also we're seeing business services quite picking up. And I suspect that's to do with vaccines and, we're not going to be closing things down as we go forward.
Okay, how are businesses feeling about employment though, especially given we're starting to see JobKeeper come to an end in March? Is that going to be a really big test, and to what extent?
It's going to be a test because there will be some sectors of the economy that are relying heavily on JobKeeper, particularly those who are under stress. So anything to do with international travel, education, etc. But overall, business are still saying employment's above long-run average. And from the internal data we collect on the revenue flows into the bank's SME market, they're basically saying that revenue is not really being driven by JobKeeper anymore. It used to be, but it's not now. And so I think the expectation is there will be some sectors where it's a big issue, but they won't be in the majority and most people will be okay. And I expect the government will cater in some way, maybe not JobKeeper, but keep support up to those sectors that are still under stress.
Alan Oster, the chief economist of NAB there. The Australian share market down 0.9% today, 6,821 on the 200. The banks are falling across the board. For more on that and the latest profit numbers and where he thinks the market will go, I spoke earlier to Robert Talevsky from Activist Investment Advisors. Robert, the market's down today. Why?
Ricardo, there wasn't a lot there to go off. Challenger was down about 11%. Otherwise, you could probably put it down to a little bit of profit taking, I guess.
Profit reporting season's really ramping up, both here in Australia and some numbers out of the US. Starting with Oz, which one's caught your attention today?
Overall, we expect a pretty good result for the second half of 2020. And that should give us a pretty good, a view in terms of how companies might perform over the next couple of months. Macquarie announced a pretty good result. initially they were talking about their earnings being down around about 32%, but now 2021 for them looks like flat, which is an amazing result given obviously where we were 12 months ago. The banks should do pretty well, and I think, look out for the banks in terms of it. They will also give us a pretty good read on, the broader economy, because a lot of their businesses are across credit growth and mortgage. So Commonwealth Bank had a pretty good result, so that's a good thing as well. In terms of, I guess, in the next set of 12 months for financial year 2021, the three sectors that we expect to do very well are the IT sector. So earnings are expected to increase by about 100%. The miners probably around about 50% earnings growth in sort of over that 12-month period, and the resources should come out sort of 30% better.
Okay, so that's Australia. How are the numbers looking like in the US?
Even better. Q4 earnings season has kicked off, and it's actually an absolute cracker. So far, around 60% of the S&P 500 companies have announced their results, and out of that, 80% of those have actually announced earnings better than what they anticipated. The typical sort of outcomes say anywhere from 20% to 80% better, which is a very good result. And it's probably the best quarter we've seen since 2008. So, a real good quarter for US earning companies.
All right, so with our market, the 200's approaching record levels, right? I think it's only around about 4% off those highs. Where do you see the market going?
Well, it's really hard to see it really kind of, coming back anytime soon. I mean, there is obviously a risk that as equity markets continue to rise at this level, there is a risk of a pullback. But then, you've got to sort of look at a lot of the factors that are going to be around for the next couple of months, or years even. Earnings growth will continue, so that'll support equities. That sort of global growth picture here in both in Australia and globally, that recovery continues to support earnings. Low interest rates, anything, obviously that vaccine rollout is also bringing a lot of confidence in the market as well. And that the upcoming stimulus package that coming out of the US from 1.9 trillion. A lot of those factors will, point to a pretty good period for equities over the next sort of 6 to 12 months. Even this morning, the Australian business confidence number came out as well, which was really strong. And that's a really important point to make, that one of the concerns about within Australia was just that sort of jobs growth. And given that obviously, the business confidence numbers are up, it just means that, potentially businesses should be hiring going forward. So that's just another factor for supporting equity markets going forward.
So given all of that, right, how are you positioning your portfolio?
We're positioning them to capture a lot of that potential upside from the equity side of things. We've repositioned it more towards the sort of the company, or the sectors, I should say, that got hurt last year, the cyclical sectors as well. So they'll continue to do it. And I think probably from November last year, they have actually performed pretty strongly, and there's really plenty of upside going forward. The small cap companies in the sector, that's done really well, and as well as the emerging markets sectors. Those are two sectors that will do very well in an environment where interest rates are low, and you see that sort of economic recovery. So that's the other thing that we've been positioning our portfolios.
Robert Talevsky there from Activist Investment Advisors. That is SBS On The Money for this Tuesday. I'm Ricardo Gonçalves. You can follow me on Twitter and Instagram at BusinessRicardo.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice, and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.